Kolareddy, who's the promoter and CEO, and Uma Kolareddy, who's the promoter and director at Midwest. Hi, both of you. Very good afternoon. Thank you so much for joining, and congratulations on the listing today. Well, first up, let's talk about some of your key projects. So what's the current status and rationale behind the HMSM project in Sri Lanka? And do you think it's going to be margin accretive? If yes, then can you quantify what's going to be the impact?
In our Sri Lanka project, we have heavy mineral. It's a heavy mineral sand project where we will be extracting titanium yielding feedstock and rare earth elements, which are again powering the EVs, the renewable sector, the defense sector, which are shaping tomorrow's materials today. So, in essence, the margin profile, if you want an estimate, that will be coming from reported margins from an Australian competitor, which I can share, Iluka, which is into heavy mineral sands, and their EBITDA margins are upward of 40% is what they reported. I believe costs in Australia will be a lot more expensive. So that gives you a sort of idea of the margin profile in the industry. And we also have a monazite byproduct, which powers the rare earth industry. And this byproduct is also a competition from MP Materials. It's a listed entity. And the US government is giving a support pricing of $120 per kg. This is per kg, not per ton, per kg for a non-Chinese alternative, which the world is looking for right now. And whereas the original price is about $60 on the Chinese index. So that's the kind of margins that you can see in the industry.
All right, Uma, so that's about the financial impact that this one is going to have. But if you could share the latest status of the project that's going on.
So currently we have exploration licenses, and we are working on environmental studies, which are to be done in 2 seasons, in 2 rainy seasons. So this is the second year of the study, which we will submit the reports very soon to convert into a mining license.
All right, and Mr. Ramachandra, if you can tell us what caused the decline in black galaxy granite realizations in the quarter gone by, and how do you plan to restore premium pricing, and is that expected to happen in the 3rd or the 4th quarter of this year?
For the pricing for black galaxy, it is the export pricing is more in line, in fact slightly higher. Our domestic market share has increased over the last year. And the affordability in India shifting from ceramic to natural stone is helping us there. But domestic pricing is still discounted or lesser than the export pricing. So the increase in domestic share has contributed to the overall average pricing. But I think that gap is likely to close in future.
So that's about black galaxy granite pricing. But Uma, let me come to you and talk about the financials a little bit more. So total debt that you have seen, that has increased substantially from 120 crore in FY24 to 270 crores in the first quarter of FY26. Now, considering the increase in in capital work in progress, if you could just share details on how this increased debt was utilized.
Phase 1 plant of our quartz processing for grit and powder, which powers the solar glass industry and the engineered stone industries. We put up a new plant with 303,000 metric ton per annum capacity in phase 1. And this is a term debt of 120 crores, which we put from internal accruals. So you can see the capital which has already been spent in last year, which accounted to the increase in debt. Phase 2 expansion, we plan to double the capacity given the huge tailwinds in the solar industry, solar glass industry. And this 120 crores in phase 2 capital outlay will come in from the objects of the issue.
Understood. So that's as far as the company's debt profile is concerned. But Mr. Ramachandra, if you can take us through what the progress has been with respect to Italian partner on export channels, and also as far as contract manufacturing agreement is concerned, has there been any progress so far?
Italy is a market for us, a major market for us, and both for natural stone, but more importantly now for the quartz grit and powder. The manufacturing of engineered stone is spread over all over the world. Almost like 40 countries produce this, and every nation is a net importer of quartz grit and powder because there are no local resources available. So Italy is strategically important for us from both natural stone granite point of view as well as quartz.
All right, understood. And lastly, if you could share your guidance for FY26 and 27 or any internal targets that you might have set for the company to achieve in the near or medium term, any details that you can share on that front?
Our growth has been quite healthy in the last few years. We have recorded CAGR EBITDA of 38, PAT of 40% for the last 3 years. Our aspiration is to grow consistently, and the new revenue streams, specifically the quartz, will be the tailwinds for the next couple of years, and HMS adding shortly will add to the tailwinds, and yeah.
Ramachandra and Uma, thank you so much for taking your time out and helping us understand what the outlook and the guidance is for the next few years. Thanks so much for joining us today. On that note, we need to